Why is it so important to have a broker who specializes?
It's really important to have a broker that you're working with who understands the nuances and the ins and outs, so they can get you the best form that matches up to your particular exposures and risk tolerances.
What do I have to be aware of if I'm a asset-based trucking company and I can get a load from one of these forwarders? Is there a difference in risk that I'm looking at?
Maybe a little bit. I don't think that there's really much of a difference in risk to the asset-based carrier.
Okay.
Other than the domestic freight forwarder, because they do have that primary statutory liability, they're going to be the first stop on the liability train.
How to manage the safety department like an expert without the 30-year learning curve. If you want to lead the safety department like a veteran and you don't want to spend years in the hot seat learning it the hard way or decades of trial and error, text the word success to 365-364-0714. Text me now the word success 365-364-0714. This week on the show, we are discussing brokers, freight brokers, property brokers, and intermediaries. What the hell? Let's get right into the show. That's coming next.
Welcome to the Trucking Risk and Insurance Podcast.
Jason, welcome to the show. Would you please take a second or two and introduce yourself and tell us about your company?
Yes, sir. Thank you very much for having me. My name is Jason Odgers. I'm Senior Vice President with World Insurance Services. And technically, World Insurance Services is a tail insurance and bond broker. But there are a couple of things I think that really kind of differentiate ourselves from other insurance brokers that your audience may have worked with in the past. The first one is that we are specialists in transportation-related insurance and bonds. Anything transportation logistics related, that's really where we focus all of our resources. We do not really get involved in standard, what we classify as standard commercial lines, property and casualty, things like commercial general liability or property or work comp. Those types of things are very well handled by more generalist insurance brokers. But the things that we do, things like shipper's interest cargo insurance, cargo liabilities, professional liability, these are really kind of special areas of management. And we really try and focus on those so we can give the best service that we can. The other differentiator, I'm sorry, go ahead.
Well, I was just going to say, why, just for the audience, why is it so important to have a broker who specializes?
Yes, sir, absolutely. Because there are a lot of nuances that go along with transportation-related insurance and bonds. Number one, there's a lot of nooks and crannies, things to be on the lookout for that a generalist may not have a lot of experience with. And then the other reason that it's particularly important is because the type of insurance that we specialize in is generally offered in the non-admitted market. So these are non-admitted carriers. They are written on forms that vary from insurance company to insurance company. Whenever we're talking about things like commercial general liability, it really doesn't matter what insurance company or what insurance broker you buy that from. The form, the coverage terms are going to be consistent from insurance company to insurance company because the state closely regulates it. In transportation-related insurance and bonds offered in the non-admitted market, each form is unique. So it's really important to have a broker that you're working with who understands the nuances and the ins and outs, so they can get you the best form that matches up to your particular exposures and risk tolerances.
And I hope everybody heard that you really got to work with a specialist who understands your risk. So as you just said, so you can match it the best way possible.
Yes, sir. Absolutely.
What is, you said something like non-admitted? Was that the right term? What is that?
So what ends up happening is in standard lines of business, the insurance companies, if they want to do business in a particular state, at least here in the U.S., insurance regulations are state-based. Every state has a state department of insurance and has an insurance commissioner. And if an insurance company wants to write commercial general liability or property insurance or commercial auto insurance in a particular state, they have to apply to the state department of insurance in order to be able to do that. And in order to get approved by the State Department of Insurance, they have to agree to certain forms, certain rate structures. They have to file their rates with the State Department of Insurance. So what goes along with that is that if that insurance company becomes insolvent and they cannot make good on a valid claim, then the state will step in and pay that claim to the insured out of the state insolvency fund. Now, the drawback with a non-admitted carrier is that they are not entitled to participate in those state insolvency funds. So if you're dealing with a non-admitted carrier, you really need to make sure that is a financially viable company, that the insurance company has been around for a long time, because if they go out of business and you have a claim, then you can't fall back on that state insolvency fund to make you whole.
Yeah, I'll translate that and say the trucking company's on the hook.
Yes, sir. Yes, sir. 100% for sure. The other thing that I wanted to mention just really quickly about WIS that is a differentiator for us is our ownership structure and our mission, really and truly. We are owned by a global association of freight forwarders, transportation intermediaries, and that group is called the WCA. And because we're owned by the WCA, our mission is really to add value, to be a value-added risk management service to the members of the WCA as a benefit of membership. So a lot of our motivations, I guess you would say, as an insurance broker may be different. Like I say, our mission is to add value, to service the members, to help them maintain the longevity of their business, to help protect them, and to offer the best service that they possibly can to their clients. So we're not necessarily out there trying to work with every transportation intermediary or transportation provider in the industry. We have a pretty well-defined core client base, and our goal is to really develop consultative and collaborative relationships with them that benefit their operations.
Right now, I want to get into a bit of the disclaimer here. Chris Harrison, Safety Dog, I know nothing about what we are going to be talking about in this episode. I've got, as you might know, scripted questions, but the answers from Jason aren't scripted. And some of these things, like this one, what are FMCSA designated authority options for domestic intermediaries? I don't even know what I just said, Jason. Can you explain the question first and then answer it?
Yes, sir, absolutely. So the FMCSA is the Federal Motor Carrier Safety Administration. And the FMCSA is a part of the U.S. Department of Transportation. So in order to offer domestic surface transportation services within the U.S., an entity, and I should say interstate, is very important.
Right.
An entity has to be licensed. They have to have an authority from the FMCSA in order to transact business. Most folks, I think, are very familiar with the asset-based carrier, the common carrier authority that the FMCSA assigns to those asset-based common carriers. But because of our core client base, the folks that we work with are primarily transportation intermediaries. They're middlemen. They're not the asset operators. They don't own the assets. They don't physically touch the cargo most of the time, but they are facilitating those transactions on behalf of the cargo owners.
And this is somebody like, if I can interpret this, you may be moving freight from anywhere in the world and getting it to Houston, Texas, for example. So the people that you represent are ensuring that product right from the beginning, I imagine, onto ships and trains and everything, then onto the trucks as the last piece of it. Is that how it's working?
Yes, sir, absolutely. A big piece of it is sort of the pre-carriage or the on-carriage associated with an international move. Where we really got into domestic transportation heavily was about, I don't know, probably about 20 years ago now, maybe a little bit less than that. There was some legislation passed in the U.S. For shorthand, they called it MAP 21, Moving Ahead for Progress in the 21st Century. It was some highway funding legislation. And in that legislation, they clarified that if any entity was providing point-to-point transportation within the U.S., interstate transportation, I keep leaving out a very important word, interstate transportation within the U.S., that was not covered by an international through bill of lading, then the entity providing those services had to be licensed by the FMCSA. So in your example, cargo arriving from Timbuktu, arriving in the port of Houston, let's just say, to the sake of argument, it was going to Oklahoma City. If that ocean bill of lading terminated in Houston, and then it was moving from Houston to Oklahoma City on a separate contract of carriage, a separate truck bill of lading, not the international bill of lading, then the entity who arranged for that on carriage to Oklahoma City would be required to have some sort of operating authority from the FMCSA, the Federal Motor Carrier Safety Administration. So for those intermediaries, there are really two designations that are available. And I should also note that for the purposes of our discussion, I'll be talking really about cargo shipments. There are some different regulations that involve household good movers or people movers, bus companies, and those types of things. But for our conversation, we're going to really talk about cargo shipments. And whenever it comes to intermediaries arranging for point-to-point interstate domestic transportation within the U.S. that's not covered by an international through bill of lading, those available designations are a domestic freight forwarder and a domestic property broker. A lot of times people call them truck brokers, but the official designation is domestic property broker. And a domestic property broker, for instance, as defined by the FMCSA, they arrange that point-to-point interstate transportation within the U.S., but they are strictly an agent of the cargo owner. They are not representing themselves as a carrier. They don't issue a house bill of lading that reflects them as the carrier. They are strictly a facilitator, strictly an intermediary working on behalf of the cargo owner. On the other hand, the domestic freight forwarder is very much like the international NVOCC, or non-vessel operating common carrier, which is to say that the domestic freight forwarder does not own or operate the assets. They're not physically moving the cargo. However, they represent themselves to the shipping public as carriers. Whenever you look at the SAFER file on a domestic freight forwarder, they'll have an FF prefix, FF 12345, whatever it is. And the service that they're authorized to provide, for whatever reason in SAFER, it doesn't say domestic freight forwarder, it says contract carrier. So whenever you look in SAFER, common carrier, contract carrier, property broker, those are the three things that you see. The domestic freight forwarder is considered to be a contract carrier. They represent themselves as carriers. They issue bills of lading that show them to be the carrier. And most importantly, they have the exact same liability for physical loss or damage to the cargo as an asset-based common carrier has. So the domestic property broker, because they're an intermediary, because they're a facilitator, because they're not a carrier, they're not issuing a house bill of lading, they do not have a prescribed statutory liability under the Carmack Amendment to the Interstate Commerce Act. On the other hand, the domestic freight forwarder, because they are considered to be a contract carrier, they do have the exact same strict liability for physical loss or damage to the cargo as a common carrier.
See, now I think I'm a little bit clearer on Well, because I really didn't know the difference between a domestic freight forwarder and a domestic property broker,
Yes, sir.
right? So the domestic, see if I got it right. The domestic property broker looks like a trucking company, but has no assets.
Almost. That's the domestic freight forwarder. The domestic freight
Okay.
forwarder is the one who acts like a trucking company but doesn't have assets. The domestic property broker is just a facilitator, just an intermediary helping to arrange on behalf of the shipper.
All right. So if I am and I've spent all my life in the asset based trucking companies and insurance, um, what do I have to be aware of if I'm a asset based trucking company and I can get a load from one of these forwarders? Is there a difference in risk that I'm looking at?
Um, you know, I think that maybe a little bit.
Okay.
I don't think that there's really much of a difference in risk to the asset-based carrier,
Okay.
other than the domestic freight forwarder, because they do have that primary statutory liability. They're going to be the first stop on the liability train, right?
Yes.
Ideally, what will happen is if a claim is made against a domestic freight forwarder, they will have primary cargo liability insurance. The asset based carrier would call that motor truck cargo liability insurance. But the domestic freight forwarder will have a version of that insurance that we just simply call primary cargo liability. So the primary cargo liability of the domestic freight forwarder should be the first to respond to a client's liability claim. But one of two things is going to happen. Either their liability insurer is going to look to subrogate uh, that payment out to the underlying carrier and their motor truck cargo insurance, or if the claim is denied by the primary cargo liability, it's still going to funnel through to the underlying carrier anyway. On the other hand, the property broker does not purchase primary cargo liability insurance. They purchase what we call contingent cargo liability insurance, or contingent motor truck cargo liability insurance. And that is really simply a defense cover. It says, hey, our client is a property broker. They don't have a statutory liability. Let me help you go find the motor truck cargo insurer of the underlying carrier and help facilitate your claim against them. So from that perspective, I would say that there might be a slightly more acute exposure for the motor carrier when dealing with a property broker, but at the end of the day, it's still going to funnel back to the underlying motor carrier one way or the other.
Yeah, and that's what I suspected basically. If you're hauling the freight as an asset based carrier and you damage it somehow, um, you're the one that's going to be responsible for it. But you're,
Yes, sir. And I do think that's a great transition, to something that I was hoping we would have the opportunity to talk about, and that is that based in my experience, and I've been working on the insurance side of the industry now for almost 20 years. But based on my experience, I think that there's um, a very poor understanding of the liability structure within the U.S. generally.
well,
I think
let's
that
get
if you
into it.
Yes, sir, absolutely. Well, and I think that if you talk to most cargo owners, I think most cargo owners have the misperception that, hey, if I give my cargo to a carrier, whether it's an asset-based carrier or a domestic freight forwarder or even a property broker for that matter, if I give my cargo to somebody to arrange transportation to the destination, and something happens to it along the way, that logistics provider is going to be responsible to me for my loss. And unfortunately for the cargo owners, fortunately for the logistics providers, that's really not the way that the liability structure is set up. The reason for that is that if every logistics provider, asset based, non asset based, intermediary, whatever, if every logistics provider had to accept a full value liability for 100% of all the cargo that they arranged for transportation, they would never be able to do it because number one, these guys they handle millions, hundreds of millions, maybe even billions of dollars worth of cargo in an annual period. And if they had to be responsible for the full value of every one of those loads, they would never be able to do it because they can't retain that exposure internally. They simply don't have the resources. And even if insurance were available, which I strongly doubt that it would be. I don't think that an insurance company would take that kind of a risk either. But even if it were available, the premium associated would be cost prohibitive, and virtually nobody would be able to afford it. So what would happen is the pool of available service providers would shrink drastically down to a small handful of big pocketed companies that could actually afford to manage all of this risk. It would result in shortage of service providers. It would result in an explosion of freight rates, and it would basically bring the supply chain around the world to a halt
Right.
because nobody would be able to operate any longer. So, understanding that, the regulators put in place a full structure, and it really doesn't. It varies slightly from industry to industry, but suffice it to say that in every industry, every different type of logistics service provider either has a prescribed statutory limit of liability or they are provided the opportunity to limit their liability for physical loss or damage to cargo under statute. So, for example, in ocean transportation, the Carriage of Goods by Sea Act here in the U.S. limits the carrier's liability to $500 per customer shipping unit. The Carmack Amendment, the Interstate Commerce Act, says that, well, it says a few things, but number one, it says that a carrier has a strict liability for physical loss or damage to cargo. Essentially, in layman's terms, that means they're guilty unless they prove themselves innocent. But there's a couple of caveats that go along with that. The cargo owner has to form a prima facie case against the carrier.
Okay, so
And what that
I was going to say, what's prima facie?
what that basically means is they have to prove a few things. They have to prove that they tendered the cargo in good condition. Usually that is done by whenever the carrier signs off on the bill of lading, accepting the goods. If they sign off on that bill of lading clean, that's generally considered proof that they tendered the cargo in good condition. They have to prove that it was received in exceptional condition, that there was some loss or damage. Again, the DO or the bill of lading, whenever the receiving party signs off on that bill of lading clear, that's generally considered evidence that the carrier redelivered the cargo in good condition. And, by the way, that is, I would say, the number one reason that we find the carrier liability claims are denied is because whoever is receiving the cargo at the warehouse doesn't properly inspect it, doesn't count every carton, doesn't pull a pallet apart to make sure that there's no concealed damage. And so they sign off on that bill of lading claim. 2 days later, they're putting the cargo into inventory and they say, oh my goodness, half of this load is damaged, and they try and file a claim. And the carrier then tells them, very, very sorry about that, but I've got this bill of lading that was signed off on with no exceptions. So obviously that damage must have occurred after my driver delivered the cargo to your warehouse.
Yeah.
And then the third thing that is required to create that prima facie case is you have to prove financial damages. You have, using commercial invoice, using an estimate for repairs, whatever, you have to prove that there was some financial damage. So again, you start off with strict liability, then you have to prove the case against the carrier. Now the carrier is put in a position where they have to prove that they weren't responsible due to one of the statutory exclusions to carrier liability. Things like an act of God, an act of public enemy, an act of public authority, act or fault of the shipper, or inherent vice of the cargo. Those are the only exclusions to carrier liability. So strict liability, prima facie case, none of the exclusions are applicable. The carrier is liable. Absolutely. Full stop, end of story. The problem is that the carrier is permitted to limit their liability. And whenever we talk about carriers' limits, a lot of times it brings us to a conversation about the released rate doctrine in the Carmack Amendment to the Interstate Commerce Act. And what the released rate doctrine essentially says is that the carrier is allowed to limit their liability. So now we've already established that the carrier has liability,
Right.
but the carrier is allowed to limit their liability to whatever level they want. And we see it as 50 cents a pound. We see it as $100,000 per trailer. The carrier can limit their liability however they want, as long as they do a few things. They have to maintain a rules tariff that says what their limited liability is. They have to issue a bill of lading prior to the commencement of transit. They have to give the cargo owner a reasonable opportunity to choose between multiple levels of liability. So the way that this is effectively done is on the front of every bill of lading, there's a section for declared value. And if the cargo owner doesn't write anything in there, then the rate that was quoted to them for transportation is considered their released rate. That is the rate that's applicable if they release the carrier from any exceptional liability, in excess of what they've agreed to in tariff, and the freight can be moved. However, if they write a value in the declared value section, then the carrier's agreed limit of liability goes out the window. They're now responsible for the full value that was declared on the front of the bill of lading. But the other thing that goes out the window is the released rate, the quoted rate for the transportation. So if I am trying to move something from Atlanta, Georgia to Chicago, Illinois, maybe I've been quoted $2,000 and the carrier's limited liability is 50 cents a pound. Well, if it's a 40,000 pound load, that's only $20,000. Maybe my cargo is worth $250,000. If I write $250,000 in the declared value section of the bill of lading, the carrier's liability is now $250,000, but my freight rate to move that same container from Atlanta to Chicago might go up to $2,500 or $3,000. And the reason for that is the additional liability that they're taking on and the additional insurance that they have to purchase to address their liability. So again, liability insurance, and one of the main takeaways that I hope that everybody gets from this interview is that liability insurance, I mean, it doesn't matter what kind of liability insurance it is, all liability insurance exists to protect the insured. And in our conversation, the insured is the logistics service provider, and the primary goal of that liability insurance is to protect the logistics service provider from the financial consequences of their business operations, either to defend them successfully against a claim or to pay those sums for which they're held liable, hopefully their declared limit of liability. It is not to make the cargo owner whole. Liability insurance is not designed to make the cargo owner whole. That's what shipper's interest cargo insurance is for. And if the shipper wants to protect their financial interests, they should buy shipper's interest cargo insurance.
Which is where a person like you comes into effect, I believe. But a couple of things that I want the listeners and watchers to hear is you said the signed bill of lading is basically contracting that trucking company now to say, hey, this was all in good shape. And then the other thing I want them to hear really clearly is when they write a declared value on the bill of lading, you better know about it because it makes a big difference to you as again, I'm thinking as a trucking company because that's where my experience goes. Is that right?
Yes, sir, absolutely. And in fact, most of the time, honestly, every motor truck cargo insurance policy I've ever seen, the intent is to address the carrier's standard liability. And if there is a declared value on a shipment, 99.9% of the time, the motor carrier is going to have to declare that declared value to their insurance carrier and pay additional premium for that. So yes, sir, you're absolutely right. If it's something everybody should be aware of, if somebody declares a value on that bill of lading, they should report that to their insurance company, because if there's a total loss, for example, on a shipment, they could be held liable for that entire declared value amount. And if they have not declared that to their insurance company and paid additional premium for it, then their insurance company is not going to respond to that declared value. It should still respond to their limited liability, but not the full declared value.
Yeah, those last few points I think are critical for everyone to hear and understand, and then go back and train your drivers appropriately, because they're the ones that are signing the bill of lading and committing you to a contract.
Yes, sir. Absolutely.
Last word to you, Jason, as we wrap up. What haven't we yet talked about that you wanted to get into in this interview?
Well, I think that one of the main items that I wanted to touch on was sort of the interaction between the different types of service providers. I think that there's certainly no need for there to be any sort of an adversarial relationship between an asset-based carrier and an intermediary, regardless of whether they're a domestic freight forwarder or a property broker. Especially whenever we're trying to make sure that we're providing the best service that we can to the shippers. Whenever we're trying to fight this epidemic, and it truly is an epidemic. I know that you guys spoke with a good friend of mine, Liam from Moret, a couple of weeks ago, and you guys spent a lot of time talking about fraud and theft by deception and things like that. And that has become an epidemic. And the only way that we're going to address that is the carriers and the intermediaries and the cargo owners working together to make sure that we're weeding out the bad actors, that we're putting in place best practices to make sure that we're verifying and validating the authenticity of carriers, not only at setup, but whenever that driver shows up at the loading dock to pick up a piece of freight. We were just notified literally yesterday of a theft that occurred in California on Monday. It was $1.5 million worth of crypto miners. It involved co-brokerage. It involved illegal sub-brokering. It involved identity theft. And we're just peeling back the layers of the onion now. But long story short is that $1.5 million worth of crypto miners are gone. It's something that likely could have been avoided through better communication. So I think that the industry overall, we have to implement better communication amongst all the parties involved in the shipments. Very importantly, we have to slow down. We have to commit ourselves to not cutting corners, to doing things the right way, the appropriate way, the way that best guarantees that we can keep these bad actors out of the supply chain, and really have the best opportunity of everybody's best interest being served. Really think that is one of the biggest takeaways is just collaboration and communication is key.
Work together and slow it down a little bit. I'm sure everybody's got the right policies and procedures, but it's when they cut corners that they get caught with their pants down, to be figurative. Jason, I want to thank you so much for coming on to the show. This has been great because I didn't know very much about what you're an expert in. So I appreciate the education. Jason, thank you so much.
Thank you very much, Chris.
And Jason, thank you. Thank you so much for coming on to the show. Truly appreciate it. I learned one heck of a lot. And if you also learned, please click the like button, leave us a comment. Who would you like to have on the show next? And of course, don't forget to subscribe to the Trucking Risk and Insurance Podcast. Love you all. Catch you later next week, right here.